Mister, let's take a stab at this.
Yep.
This week we saw actually KMRC towards the close of the year last year, they talked about issuing a bond, a corporate bond, and we saw that this year there's been a huge debate, on Twitter and social media about, so KMRC is going to issue a bond, 10.5 billion Kenya shillings. They've identified, they've gotten an interest of around 12.25 to 12.5%
interest rate.
Yeah, interest rate around that space. Okay. So the thing is, they are issuing it in stages. So the first phase is actually 1.4 billion, and I think will be closing. It opened on Friday the 4th of February. It will be closing in 18th of February. Okay. Now the thing is here, the debate has been KMRC is getting this money at 12.5%. Yeah. Okay. And then they'll be lending this to mortgage-based lenders. I'm talking about SACCOs and I'm talking about banks here. Yeah. So they'll be giving them the money at 5%. Yeah. So, of course, as you've heard, that mathematics doesn't make sense.
It is not mathing.
12.5, you get the money at 12.5%, then you issue it at 5%. And now there's been a lot of questions on why this is happening. And so we want to help address this and make people understand why this is coming. So let's get this right from the first. KMRC, the Kenya Mortgage Refinance Corporation.
It's company
Company or corporation, KMRC. So what happens there is that it's owned by Treasury and some of the banks in Kenya. Okay? So it's a mix of public-private. Okay? So as their name goes, mortgage refinancing. They're into mortgages. Now, Easter, do you happen to know why they're doing this? Because I mean, for you as a CFO, would you borrow at 12.5% then give out at 5%?
For me as a CFO, I would never do that.
Absolutely,
that would be career sabotage. But KMRC is not a fully business oriented entity.
It's owned by Treasury and some banks.
So there's a bit of social...
Treasury is government,
Exactly.
Absolutely.
Treasury is government. Government comes with social interest.
Government...
advancing social interest.
As they normally say in economics textbooks, that the role of government is to maximize welfare.
Exactly. How do you maximize welfare? You come up with economic policies and goals and manifestos. You're familiar with that now that you're headed towards an election. And for Uhuru Kenyatta, who was the president, when he was looking to get into the office, or had he gotten at the time he was launching his Big Four?
I think it's a second term. In his second term, that is from 2017.
At that point, he mentioned
affordable
housing. Right?
Absolutely.
So you have to see that the government then starts to have among its welfare provision goals to its citizens. Provision of affordable housing. So it's gonna try to advance this through any tool it has. Right? If it is money, if it is getting concessionary funds to advance these agendas, that is for to get the money to build the houses, to do that, it will do that. So the government the Kenyan government happens to have a special purpose vehicle for advancing that, which is the KMRC. Right? How do they do that? They go ahead and mobilize funds to do that. That is getting funds from whatever sources they can. Put it through such an SPV as KMRC, then actualize or provide what they had promised, which is affordable housing. So I feel like KMRC is just the government's vehicle. So let's not look at this, the government's vehicle of providing its agenda of fulfilling its promise to the citizenry. So let's not look at this from one lens, from this one angle of, does this make financial sense?
Easter, you're not entirely wrong. You're not entirely wrong.
I was also entirely right.
No. I've chosen my words well. You're not entirely wrong. So let me paint the picture for you. KMRC already has financing. Concessionary financing from World Bank, from AFDB, the African Development Bank. And they're getting this money. Let me ask,
what's the sustainability of that? Because lately I've been hearing of them having issues with accessing the same concessionary loans.
Yeah, because of course we've moved to, President Kibaki moved us from those low income, we moved to middle. Yeah, so we couldn't access. But then there are some I'm not 100% sure, but of course there are some areas in which you can still access. Okay. So for this particular one, they're getting this money from probably IFC, from FDB at around 4%. Okay. So now what they are doing is, and this money comes with disbursement conditions. Okay. So the reason actually why KMRC is issuing a corporate bond is they're not issuing a corporate bond because they don't have money. They're issuing it because there are some disbursement conditions that they need to meet. Now, what do I mean by disbursement conditions? So your IFC FDB is giving this money as 4%. But they are telling you that we need continuity. Okay? Yes, we're giving you at 4%, but then you won't always get this money at 4%. So we need proof from you guys that you are an entity, that you are a strong entity that can raise finances. Okay?
Alternative finance.
Yes, that you can raise finances that, for purposes of continuity, that in the next 20, 30, 50 years, you guys would still be in business and you'll still be doing stuff.
Yeah.
Okay? Yeah. So we need you guys to prove to us that you are a strong entity that can actually, a competitive entity that can raise finances. So what KMRC is now going to do, they're going to blend these finances. So you see they'll pick a huge chunk of what they're getting at 4%. From the development partners, then they pick a small portion from the 12% one that they are getting. The public, from the corporate bond. So they blend these two, and now they find the balance, and now give it to the SACCOs and to the banks. So this is actually it's like they're meeting their obligation in terms of a requirement that they're supposed to. Because to unlock those concessionary funds that you're being given at 4%, you need to agree prove, and follow. Yeah, you need to prove that your competitive entity that can actually raise finances, and that's why they are doing this. So they are doing this to unlock that.
I have a lot of questions. I have a lot of questions. Like, so you're gonna get this pool of funds, which as you're saying, they already have, right?
Yes.
This pool of funds that they're getting at 4%.
Absolutely.
Right, a rate of 4%.
Yeah, they're getting from FDB, all those guys.
Are they getting the loans in Kenyan shillings? You know, what denomination is the loan? I don't think they're in Kenyan shillings.
I tend to think in dollar, yeah, definitely.
So even the rates are in dollars? 4% of it's in dollars?
Yeah.
That's not cheap. It's not cheap anyway. Yeah? If it's 4% of Kenyan
considering shilling, that the shilling is taking a beating at the moment.
Exactly. So it doesn't mean much when at now they have 4%, which is in another denomination.
But then,
let me not say that with finality.
But then you get the reason why they are doing it. Now, does it make sense from now after I've made that explanation? Does it make sense?
They're trying
the decision
to meet compliance.
Yeah.
Okay. Yeah, it makes sense.
Yeah, because also for continuity. So it's just.
But then.
But then the thing here is you can't blame them. 12.5% is very high. So, but then you can't blame them for that, because that's just market forces. I mean, look at the ABSA bond, look at the EABL bond, look at even the IFBs. They're all playing at around that circle of 12 point something,
which is why they're constantly oversubscribed. Yeah. It means they are also over enticing people. If they are to come up with 9%, the market won't display as much demand for the
I mean, we've seen that with T-bills,
but they might still get what they need.
Now that I've mentioned IFBs, last week we had a conversation with Bonito, not Bonito, sorry, Boni Oyunge.
Tell them who Bonito is.
Bonito is also one of the producers here at Trio Media, so I've just confused the name. So we had a conversation about IFB competing with KMRC.
Yeah.
And I think both of them are going to be oversubscribed. Yeah.
Because they're going for the... Again, 12.5%
is good. Is really good in this market.
And now look at the other... In whichever market.
Yeah.
In any market.
Yeah, right? Especially if you're coming from the West. Yeah. This is tantalizing.
And look at the other terms, which is no tax.
It's
very good, right?
Yeah.
So I think we are over enticing people. Let us lower that, because at what rate did the EABL issue their bond at to get 245% interest?
At what rate?
Yeah,
I think EABL were doing some around 11.5, if not 12 point something. Yeah, but it was certainly above 11%.
So are we running? Okay, no, let me not. That's like violence. Violence.
So an interesting thing is,
but you understand my point, right?
And I understand your point.
I feel like we can. These people that are issuing bonds can afford to lower their rates and still get the money they're looking for.
Yeah, because it's on the basis that it's being oversubscribed.
12% is on oversubscription, so it shows there is no demand supply balance there.
Yeah.
So they can lower it to get to equilibrium.
Yeah, because EABL was oversubscribed, I think, by 200 and more than 200%.
Exactly.
So that tells you that even if they did 8-9%,
even 3 percentage points less, they could have gotten 100%.
That makes sense. I think that should be explored more. I think people fear under subscription. So you fear that you put up a bond and
but
then
at what cost? At what cost, Keegan? You asked me as a CFO what I'd do.
Because credit at 12% is really expensive, and that's one of the reasons why EABL actually retired the bond.
That before, yeah.
They retired because it was really, really expensive. You remember that?
I can't remember that. I wasn't keen to see that.
Yeah, but it was at around 14%, close to 15. You remember that, the one that they retired? So they retired it because it was really expensive. So I'm looking at that. I'm looking at how in your books how the cost of financing is going to look like, and it's going to be crazy.
Yeah.
Is there something? You'll find this funny. So we are still in the conversation about KMRC and mortgages and affordable financing. So I came across something really interesting.
Yeah.
So that in the affordable housing project under I think it's under the Ministry of Land.
Housing.
No, there's no Ministry of Housing.
There's no
Ministry of Land. So State Department of Housing under Ministry of Land.
State Department of Housing.
So what happened is, so they have a number of projects across the country.
Yeah.
And in Nairobi, they have a project in Park Road.
Yeah.
This is around the area of Pangani, Ngara, here in Nairobi County. Now, the thing is that for people who bought those units, so those units were given to, I think, a certain percentage was given to government workers and others were given to guys to just buy, citizens. So now the problem has been that this week, the people who bought those units found out that the State Department is welcoming bids for parking slots. So the government is selling parking lots in the apartments. In the apartment area. So you bought
crazy. The assumption in real estate business is once I buy a unit, I'm entitled.
See, there's a parking there. I'm supposed to access the parking. So you'll be coming home, you'll pay someone to park your car there the whole night, you go sleep, then in the morning you come
to park in town.
You see how it's crazy.
What is that?
But then Charles, I think his name is Charles Inga. He's the PS, State Department of Housing. So he I think issued a statement to the Business Daily, which is one of the leading business newspapers, that they have revoked that welcoming of bids. So but for me, it was the audacity. Chief.
Yeah. But what does that tell you about this government and just coming up with policies here and there?
Man.
Without thinking them through. Because clearly this wasn't thought through.
I mean, how do you sell the parking lot? Where will these people park their cars? And they've bought the units there.
But again, I'm a very big advocate, if there's a word like that.
Advocate?
Advocate.
Oh, Chief.
Can you edit that out? But anyway, I'm a very big advocate for due diligence.
Yeah.
The government, if in the contract you're signing when you're purchasing this house, they have a program for buying those houses.
But then Easter, no.
There's that program.
There's actually nothing about due diligence there. Those are just industry and global standards.
No, I said it's
that if you buy a house, see, there's parking slots at the ground floor. So see, you're like, I'll have a parking here. This is for an apartment setting for flats.
Do you know how the prices for these housing units provided by the State Department for Housing compare with the normal market rates. Of course, they are subsidized.
Absolutely.
They're subsidized, but now just to give to paint a picture of the subsidy or the subsidization of these houses, these units. One bedroom apartment unit goes for 1 million shillings. 2 bedroom 1.5. And the other one I can't remember exactly the price. The 3 bedroom. That's one of the things that as an investor I'd be like, that's too good to be true. In as much as it is subsidized, like for what the market rate.
What do you mean too good to be true? No,
you cannot get a studio apartment for 1 million in Nairobi.
No, but then
the government, in as much as they've subsidized it, they're giving it to you at 1.1
million. So you're thinking that if you're getting that, you're also getting other facilities like parking and all that.
No, you need.
So that's your line of thought.
Yeah. Yeah.
Okay, let's leave it at that.